Hi, my name's John from moneystream.com.au. Welcome to my YouTube channel. And I'm pleased to introduce Josh Hugo from Finicky Finance. Josh is the director, and Finicky Finance is an asset finance specialist, allowing businesses to fund equipment to grow their business. Welcome, Josh.
Hi, John. Thanks for having me on.
Pleasure. We've just launched this moneystream.com.au YouTube channel and had quite a bit of interest where potentially small businesses, franchisees looking to get into the small business space, especially given COVID-19 pandemic that's well, we've had a terrible 2020. And hopefully your services where you can assist potential clients in the future. Both for new business acquisitions and to expand their business. Josh, what type of client could you assist given your services through Finicky Finance?
Well, John, we have two broad types of clients, businesses and consumers. The large majority of our clients fall into that business category. So clients need to fund growth such as equipment, marketing opportunities, pay invoices, equipment being the predominant one. And business finance falls into four main categories: no documentation, low documentation, alternative documentation, and full documentation. That's documents that the client needs to provide to get approved. So it's about tailoring the finance to provide suited options for that client. Consumer, on the other side of the coin, which is a smaller part of a business. Consumer finance is predominantly clients looking to purchase a car, for example. So yeah, business and consumer clients.
Lovely, lovely. So I guess there's an opportunity there where small businesses haven't got all the documentation. Example, the taxation side of things, etc., etc. So through your due diligence, they're obviously able to gather documentation at a minimum level that supports the application through their accountant or what have you, and you can still have a look at that application where in some cases years gone by they've just got no way of even being looked at. Would that be correct?
Yeah, so that's pretty much spot on. So every lender has different requirements for approving a loan. And some lenders want different documentation than other lenders. So it's just about giving the right solution to the customer with the right documents they have available. So yeah, the mainstream way of applying finance is provide me everything you've got, your underwear. Not everyone has everything up to date. Not everyone has everything crystal clear. So it's about giving them those solutions that fit what they have available.
Lovely. Sounds great. Now, can a new franchisee or independent, say someone that's looking at buying an existing business, so a business that Joe Blow was running, now selling, it's been going for 2, 3, 4 years, or a franchise. There's a lot of franchises around, and a lot of people looking to get into that space. Not only to be their own boss, but also to have some independence and a lifestyle. And also the upsurge on current data provided through the news here in Melbourne, especially. There's been an upsurge of individuals selling up in the city areas, suburban areas, that digital nomads they refer them to, or they're running small businesses, and they're moving to regional areas. So can these type of businesses, again, independents, franchisees that are looking to acquire these businesses, can they gain assistance from your services?
Yes, certainly can. So you'll find that, we'll touch on it, the new franchisee, for example, new businesses in general find it extremely difficult to obtain finance, especially through the traditional channels. And that's because about 50% of businesses fail within the first 2 years. And lenders are well aware of this fact. So it does make it harder for new businesses to get approvals and get the finance that they need and want. But we have quite a few options available and a number of solutions for new businesses as well. So yes, new businesses can get it. It is obviously tougher, Regarding to existing businesses and existing, franchise holders, that they find it a bit easier, and they have more options with the finance. So that's both of them can definitely be helped. Our job is more to hold the client's hand throughout the process, making sure they're aware of every step in the process and they completely understand what's happening.
Lovely. Yeah. So again, independents and franchisees looking to acquire, they can use your services, and anyone that's also looking to upsize or downsize, as I say, been a lot of media coverage with data supporting it that individuals, businesses are moving to regional areas, and obviously expanding in terms of a home office. So there's opportunity there if it's for a small business, to buy equipment and so forth. Lovely. So, can you talk us through your checklist? So, if a new business, new clients need to fulfil to qualify for business lending, what would a potential client require to come to see to qualify for an application?
Yeah, that's a really good question because there's not a one size fits all. We deal with over 30 lenders, John. So every lender has their own specific criteria, and there isn't this one size fits every single client, every single lender. So very generally, it's hard to say without having a discussion with a particular client. But that being said, all lenders hate credit impairment. So issues like defaults, court actions, poor references on other loans, especially unpaid. So very broadly, you want to make sure you've got your previous issues solved. What lenders do like though, and it's not necessarily a box ticking exercise, but they prefer it. Lenders love having seen deposits. They like seeing property ownership, tax return, their financials lodged, ATO payments up to date, current finance paid on time. Now, most clients don't tick all the boxes, far from it. So we work with the client's circumstance to provide them relative solutions. So yeah, I guess in short, trying to have any credit impairment, but yeah, give us a call either way and we can help you get to your solution.
Sure. So I guess in saying that, would you encourage a client if they're looking, say, 3 months down the track, to contact you, and then you're able to provide support, if I can use that word, support, in terms of what you just spoken. So if a client potentially has is credit impaired for whatever reason, you're able to sort of hone in on that and provide some assistance or who they could go to pre-application, which would actually benefit them when they do apply, rather than do it the other way around and then find out after the application that they might have a default, etc., etc. So a little bit of education here.
Yeah, 100%, John. Recommend speaking to myself as soon as you can in the process.
Yes.
Because what we do in our process before we submit any loan for an approval, we do what we call a pre-assessment. So we get copies of credit files, assess income, assess expenses, to identify which options best for you. And clients may want to get to a certain space with the finance that we can help get them there. Sure. And by speaking early in the process, we can guide them in the right direction.
Lovely. And so just to give the clients or listeners that are looking for some assistance down the track, when you look at their pre-application, they're not looking to apply yet. That doesn't affect their credit rating, so it's not an inquiry, etc., etc. And is that a free service you provide, Josh?
Yeah, correct. So we pay for the credit file. That's something that we bear, and the client won't pay us to engage in a pre-assessment. That's essentially a free service. We'll do the pre-assessment when we get a copy of the credit file. It's not a hit on the credit file, it's an application. So we look at it, everything. We give the feedback to the client. We present the credit files to the client prior to any submission. That's no cost to the client. That's no credit application. Once they're happy with everything and they apply, then that's when the credit application is done. But yeah, the pre-assessment, it's not a hit on the credit file.
Lovely. Sounds like a great idea. Gee, I wish I'd known about that years and years ago. It's easier to do that first and then apply for the loan rather than do it. And then you find out I got this and I got that on my credit file, and the loan may get knocked back.
Yeah, 100%. It's good. It's very important to do because once you apply straight away. You wait to the last minute to buy that bit of
Lovely.
equipment, the car, whatever it may be, and then you apply and you find it as an issue. One, you've got an issue which you need to resolve as fast as possible because you want that car, you've already ordered that vehicle. The second thing is you've already applied that lender who's now seen that issue as well. So, yeah, it's definitely worth speaking to me as soon as you even think about buying a vehicle or equipment. Um, Need funding for a growth opportunity. Definitely.
Lovely. Very, very, very efficient, very professional. Josh, ABN holders, example, sole traders. I mean, there's a lot of sole traders, a lot of single parents, that may be sole trading, plus looking after the kids, working from home. Again, an upsurge here in Melbourne of moving from the city to regional areas, obviously to save some money, and then expanding their business. A lot of people were, office works and so forth down here. They've had an enormous uplift. They've actually run out. A lot of their stores ran out of products, computers, and so it's just a mountain of home offices, startups. So sole traders with an ABN versus companies, your PTY, LTD, etc. Who can apply for what type of loans for their business? Just a quick rundown. Again, to expand their business.
Yeah. So whether it be a sole trader, a partnership, company, trust, finance options are very similar. The main one is chattel mortgage or finance lease, rental, operating lease. Um, the significant majority of the clients have an ABN choose a chattel mortgage, which chattel mortgage, just so you're aware, and the viewers are aware, it's essentially a way of a business buying an asset that the finance company has security on that asset. So it takes security on the vehicle, the truck, the equipment, but the actual business owns the asset. And coming with the ownership of the asset, generally speaking, the business is then able to claim GC as the next best, depreciation on the asset, and the interest component as a deduction. What you'll find the difference between the ownership structure, whether it be sole trader, partnership, or company, the main difference is who owns the asset and what documents are needed for an approval. Obviously, under a sole trader and partnership, the individuals own the asset, where a company, it's not the individuals that own the company, it's the company itself, or the directors or guarantor. When it comes to documents needed, companies provide financials if they go out on the path of full documentation, and sole traders and partnerships provide tax returns. Sole trader and partnerships almost never provide financials. So although the finance options are the same, different documents are needed.
Lovely, lovely. And turnaround time, just indicative, of course, because every application is different. Again, depends which lender will support the application, and lastly, of course, formally approve it. Of course, that's case by case, but just indicative. So from the process, whether it's low doc or complete doc and the products, where you've explained that brilliantly, what sort of time frame potentially could someone, let's say, looking to upsize, move to the regional area, buy a company vehicle, whether it's sole trader or company, and buy some equipment to expand the business, a home office, etc., etc., etc. What sort of turnaround time from, say, application to funding, for example? Just indicative.
Okay, great question. So the funding process has two big steps: approval, then settlement. Approval, depending on the lender, can be anywhere between 2 hours to 2 weeks. Lenders vary from 2 hours to 2 weeks. So you find majority of lenders that are a few days for an approval. But so what we do is, in the pre-assessment stage, we identify what's needed, what the client wants. If the client needs to get the asset yesterday because they've got work that needs a truck to move materials, then we're going to go down the faster path. The clients order equipment 2 months away, then have the luxury to use whichever lender they want to use, assuming they qualify. Once you're approved, it's then settlement. So the client gets, say, a tax invoice for the equipment. If there's no equipment purchased, the settlement process is much faster. We don't actually provide equipment being funded. But if it's, let's say it's equipment finance, for example, get a tax invoice, they then organize the customer to sign documents and then settlement. So let's just say best case scenario, approve within a couple of hours, settlement a day or two. So I would say on average, if everything's crystal clear, the settlement process from the very beginning, from approval to settlement, can be less than a week.
Wow, that's excellent, excellent. And again, just to highlight what you were explaining in the earlier questions, that if an individual business sole trader, what have you, has all their documentation, inquires with you early, at the outset, I guess that'll complement the application with what you're just speaking then, in terms of providing all the documentation, which will add credibility to the whole application through to approval process.
Yeah, that's correct.
And you deal directly with the companies in terms of say if it's a chattel mortgage, etc., etc. So you when you do the funding, let's say once it's formally approved, you deal directly with the company for funding and so forth, and the client just picks up their equipment for their small business expansion.
Yeah, that's correct. Especially with equipment. Equipment process is very broker heavy or broker intensive, which means that the broker does almost everything with the client. Some different channels like business loans can be a little bit less involved with the broker, but you'll find equipment finance, especially, let's just use the car as an example, we'll organise the approval with the client. We then go to the lender to organise approval with the lender. We then organise settlement with the client and settlement with the lender. So the client's interaction with the lender is almost entirely with us, the broker, up until settlement. When things need to be changed post-settlement, whether it be direct debit, payout loans, they can speak with us, but tend to speak generally directly with the lender as well.
Lovely, lovely. Very, 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 very professional. Now, Josh, how would people get in contact with? So if the viewers that are watching this the first time, or it could be a month down the track, whenever people are ready, obviously, as I say, in Victoria, in Melbourne, there's an upsurge according to data where they're moving to regional areas, a lot of small business startups, etc., etc. How can people get in contact with you? Because I'd be happy to provide your link, your website, whatever your contact details are, in the description bar here on my YouTube channel. But if you want to sort of say out, how they can get in contact with you, with everything you've explained quite clearly, and also for individuals that may be looking to borrow, to borrow money or buy a car, etc., etc., etc. How do they get in contact with you?
Yeah, there's three main ways of getting in contact with me. The first is through finickyfinance.com.au. That's FINICKY finance, finance.com.au. Submit an inquiry through the website, and someone will be in touch. Alternatively, they can call us on 1-800-FINIC, FINICK, or email me directly at Josh Hugo, JOSHUGO, at finickyfinance.com.au.
Brilliant. So you're available personally as well as you are now, where you've provided your time with this interview. And if someone's got some quick questions, there's a lot of people that are time poor. So you've given your email address where they can email you, email them back. And again, you've got your online platform there, your website, where they can navigate, quite informative as well, and they can submit an application or inquiry online.
Yep, that's correct.
Correct. All right. So, Josh, in conclusion, perhaps if we can get you to highlight that clients that deal with you via the internet can give an indicative timeframes for funds disbursement once the loan is approved. So again, if someone's applying with you, say tomorrow, hypothetically, tomorrow's Friday, obviously end of the week, if they've inquired, a few weeks ago and you've educated everybody on, dot the I's, cross the T's, with their credit check, if they've got all the documentation through your checklist that you do provide, so they've put the application in, say, tomorrow, and then what sort of time frame would they have the funds, providing it's a bit of a later misere deal, as they used to say back in the day in the finance game? Indicatively, when could they sort of pick up their equipment?
Yeah, good question. We find the majority of the delay is with the equipment. So, like I said before, approvals can be anywhere between 2 hours to 2 weeks, depending on the lender. The client's time poor, we go through the fastest option possible and get it approved as soon as possible. So that will be a day or two, if not even less. But we find the biggest delays with the actual equipment, because equipment often is ordered if it's new and might take a few weeks or a month. So once you're approved fast, you've found the equipment, we then organise settlement, which generally takes a day or two as well. So like I said before, from start to finish can be less than a week. It's just the equipment that could delay the process. Yeah.
Wow, that's fantastic. Josh, thank you so much for joining us today. I'm sure our viewers, this is much like a tutorial where, and let's face it, there's a lot of people that, for the lack of a better word, they may not, they might be time poor, where they're a struggling individual, family, a single parent, what have you, or someone just out of uni. So you've clearly explained everything brilliantly. So Josh, I'd like to thank you for joining us here at moneystream.com.au. Josh Hugo from finityfinance.com.au. And to our audience, if you like the content, please give us a thumbs up. Comment. We encourage you to comment on our content if you like it. If you don't, how we can improve, and also subscribe and share. Thanks very much for tuning in. I'm John from the YouTube channel moneystream.com.au. See you next time.
Thanks, John.